Mike, I think the question every advisor wants to ask, but sometimes doesn't. What's the most important metric we're looking at when we're talking valuation?
Yeah, okay. Well, valuations are interesting, right? Because we have to look at a lot of different areas of the business to get a accurate valuation. And so what I like to do is when I'm having conversations with advisors, we're talking about key KPIs here. So we're looking at things like, let's look at the makeup of the book. How many households does that AUM represent? What's the average size of the household, average age of those clients? That helps us get a good sense of the client demographic. So that's one side of it. Then you start to look at the financials, right? How is the firm operating financially? Of course, we're looking at things like revenue and expenses. When we're doing valuations here, if we're going to get really detailed, we're looking at multiples of EBITDA, right? Multiples of the profitability and the cash flow of the firm. But there are a lot of things to consider with that. If you have a firm that is prepared for growth phase, they have likely invested a lot of capital to prepare for the next phase of growth. They have likely hired individuals. They're spending money on marketing. So although maybe their bottom line profitability isn't as high, they are fully prepared for that next phase of growth. There's capacity. So one way we adjust for that is in the multiple. So when you think of what multiple are we applying to that EBITDA, it comes down to those KPIs. So it comes down to the makeup of the book of business, but also how prepared is this company for the next phase of growth. And so we can kind of counterbalance maybe a lower profitability, but having capacity with a slightly higher multiple on that EBITDA. So there's a lot of metrics that go into this, but I think the key part for owners to keep track of is track year to year how those KPIs are looking. Is our average age going down or up? Is our average client size going down or up? And if you have had a period of high capital expenditure, if you're spending a lot of capital for growth, keep track of a year later, did that relate to higher profitability? Is your margin going up as proportional to the amount of capital that you're putting out there and spending? And those are the kind of metrics that you can start to see. Is my enterprise value, is that valuation on an upward trend or more of have we plateaued? And where do we need to make adjustments to increase that valuation?